Our guest says he continues to marvel at the strength of Canadian energy stocks, especially exploration and production names, in light of the very weak performance of crude oil. It's a really good topic. Let's bring in Ryan Bushell, CEO and Portfolio Manager at Newhaven Asset Management. Great to see you. You have some pretty striking charts for us, Ryan. Thanks for joining us. We'll have a look at those in a sec. But let's maybe have a look at a 5-year chart for XEG, an ETF that tracks the energy producers. It is amazing how they've held in.
Yeah, for sure. And thanks again for having me, Andy. But the performance of Canadian energy stocks, it used to be when the oil prices went down, we got hit even harder. That was because of differentials blowing out and our production in Canada being seen as high-cost production relative to what was cheaper, shorter cycle U.S. shale. And that trend seems to be reversing. So, today it's interesting topic with the potential pipeline announcement coming out of Alberta. I think it's just an interesting time to examine Canadian energy stocks, both on the oil and gas side, because I think the dynamics that are happening in oil that have happened over the last couple of years, I think are poised to repeat in gas over the coming few years.
Well, you have a chart here showing a 2-year total return for a bunch of our energy names. Oil has dropped, but they've been strongly positive.
Yeah, and so you can see on the chart some of those names up 80%. And I didn't just include the E&Ps in this chart. I wanted to also include the infrastructure names, TC, Enbridge, and Pembina, which have also been strong over the period, just to show that really the whole Canadian energy ecosystem has performed positively, again, at a time where typically when oil prices go down, especially down as significantly as they have, they would get hit harder. The other thing that's interesting about that is I think it's pretty easy to chalk it up. People have made this story on a year-to-date basis and said, okay, change in government, we're getting the announcement in theory out of Alberta today, chalk it up to, it's just that simple, that change in government has changed the attitudes. But actually it's gone back a longer period, and I think that speaks to some larger dynamics at play.
And Trans Mountain, that's been interesting. Since the Trans Mountain expansion opened in May of last year, oil has dropped, but similar pattern. Our energy stocks have held in just fine, beating American counterparts.
Yeah, and I don't know if you've got my second chart up on the screen there. And so, yeah, so that is one of the larger dynamics. So to me, there's kind of three things at play here. You've got Trans Mountain has put a floor under the price of oil for Canadian producers that has reduced that differential to just the transportation differential to the Gulf, which is about $10. It had been as wide as $50, say, in the past decade. So that's one major key factor. The second factor we talked about is the government change, sentiment becoming more positive. And the third factor is kind of under the surface and a little bit more ambiguous, but it is what is happening with U.S. shale. And again, on this chart, it shows that U.S. producers are down over this period while Canadian producers are up. And I think it speaks to some money potentially rotating back to Canada for the two reasons we listed earlier, but also potentially concerns about the inventory depth of U.S. shale. Yeah,
that's the thing with the shale. It runs down pretty quickly. Yeah, and we are blessed in economic terms, in any case, with those oil sands. They last for decades.
Yeah, that's right. And so you're seeing, again, capital finally feeling maybe somewhat comfortable to come back to Canada. And so it speaks to, we're in a questionable crude environment going forward. If Russia and Venezuela get solved to the point where more production comes on from those two countries, that's going to be bearish for oil prices. So I am not necessarily making a bull case for the commodity, but it does show that when we typically had a higher beta to the commodity, especially to the downside, meaning Canadian oil stocks would underperform when crude went down. Now they're actually showing less beta, and that cash flow discipline that was imposed on them over the past decade, I think, has put them in good standing with the international investment community, where we are seeing some dollars come back. And, again, we've got the AI trade as well, where energy is down to 3% of the S&P 500. If that rebalances at all, Canada should benefit. The last thing I wanted to get in just before I leave is on natural gas, because I think similar dynamics could happen in natural gas for Canadian producers, whereby we don't necessarily see a hugely positive commodity story, but we see a floor put under Canadian prices with export capacity poised to come online. LNG Canada now online, but maybe phase 2, wood fiber, Cedar LNG, and some other projects going forward into the future.
Have seen something of a rally for U.S. natural gas lately. Maybe we can put up a 5-year chart. But it has been disappointing, hasn't it? I mean, this year, Alberta natural gas, in theory, going negative at times.
Yeah, and to the chart I put up earlier, you can see Tourmaline being the worst performer of the major Canadian oil companies on that chart, and that does speak to the dynamics in Western Canada related to Western Canadian, really soft Western Canadian pricing for gas, which again is still currently landlocked by the fact that we don't have enough egress capacity, meaning transportation capacity, export capacity out of Canada, and that is changing rapidly here. So, again, that's where I think you could see a similar dynamic happening in Tourmaline, say, over the next 3 or 4 years, or ARC Resources or any number of Canadian gas producers, whereby the commodity doesn't necessarily perform, but the stocks start to perform because Canadian prices are getting better.
Finally, we've less than a minute, but it's a bit of a tricky one for Mr. Carney, isn't it? Placating BC, but perhaps expressing support for a pipeline to the northern BC coast.
Yeah, and I think that'll be difficult to get done, even if there is a big announcement today. So I wouldn't be trading that news, so to speak. I wouldn't do it anyways. But it will be interesting to see what actually gets done. Right now, there are some pretty nice brownfield expansion opportunities. Trans Mountain could be expanded a little bit further and sooner than many would have expected. Enbridge has got a transportation. They just had an open season on about 100,000 barrels a day going to the Gulf that was well subscribed and could do another 250,000 barrels a day going forward. So there are some smaller incremental expansions that I think will tide us over. I don't necessarily think we need a major export pipeline in the next 3 or 4 years, say, but it is nice to see that we're thinking ahead finally.
Ryan, thanks very much indeed. Ryan Bushell, CEO and Portfolio Manager at Newhaven Asset Management.